it. They are using the suppression of the Western system to literally drain the exchanges of all of the commodities, not just precious metals. And you look at a country like China, we've talked at length about their Belt Road Initiative, which already represents, roughly 50% of global GDP, 75% of human population, and it's growing. And all of these countries are resource rich. So China comes in and builds roads and bridges and maritime channels and helps build all of the infrastructure, the oil refineries and rigs, the gold and silver mines, and everything, and the ability to pull it out of the ground and to transport it to market to industrialize the country. These are all underdeveloped countries. At the same time, you look at their trade agreements that they've done. They just were awarded a massive $2 billion deal to modernize the largest airport in Iran, and they're paying for it in oil. They're buying soybeans and corn from Brazil, paying for it in digital yuan, which is immediately convertible into gold on the Shanghai Gold Exchange, which is what? The only other tier one asset, as classified by the Bank of International Settlements, who is standing behind Project Enbridge, that Saudi Arabia just became a full participant in and is not compatible with dollars. You can see the pieces are being put in place. And so when you talk about little by little and then all at once, like you said, where this will happen little by little and then all, but that's exactly what's happening. It's like jiu-jitsu. When someone comes at you, you use their leverage against them. Well, that's what they're doing with us. They're using our leverage of being stupid to support the illusion of a strong bond market and dollar market by suppressing the monetary metals against us by standing for delivery. And doing so at a fashion that is draining the exchanges at a level the world's never seen. So it will get to a point where things begin to change, and exchanges like Shanghai and Moscow and Dubai start to set the price. And that's not really far-fetched, because over the last 4 months, the cumulative volume on the Shanghai Metals Exchange and the Shanghai Futures Exchange is up 200%, surpassing the volume we see on the COMEX picture. Look at U6, the number that used to be quoted up through the 90s, that John Williams of Shadow Stats will tell you we're at 7.5% to 8% unemployment, not the 4% that the current mandate says. And at the same time, inflation, he'd say add an 8 to it, not the 3, but we're over 11%. And now we're going to reignite that inflation spigot. Inflation's only going to get dirtier and dirtier and dirtier. And the rest of the world understands that. So I would say it's rocket fuel. You put it into the equation, you got positive inflows into the ETFs for the first time in 2 years, a Fed that is pivoting and lowering rates for the first time compared to the 500 basis point increase, which is supposed to be the death knell for metals. And yet they continued to go higher in the face of positive real yield, spiking interest rates, strong dollar, etc. You add this now and turn the other way, the potential is crazy. We're right at that breakout level of about 3250. You cross over 3250, which was, if I'm not mistaken, the previous resistance on the way down from 50 before, and would be the decade high. There's nothing stopping it on its way to 50. And when you talk about gold, we're already at all-time highs. But here again, the values are distorted completely and totally from reality because of the suppression. Like I showed you, gold was number 2 on that chart, right behind silver in terms of suppression, because it represents an illusion of strength of bond market and of the Western system. The rest of the world knows that we're lying about all of this stuff, lying about inflation, lying about unemployment, lying about money creation, all of the things that we've been able to successfully keep from people. The rest of the world gets it now, or much of the world gets it, and using it against us. So I think, especially with what the Fed's doing, and especially if Goolsbee is right, and we see several more cuts baked into the cake over the next few months, the potential is crazy. And if both candidates want lower yield or lower return on fixed income, they both want lower rates. It's not what we need. It's the worst possible thing. Best thing for my business, best thing for those of you who hold precious metals, but not a good thing for the future of the dollar.
Billionaire hedge fund manager John Paulson announced that if Kamala Harris wins, he will withdraw $9 billion out of the market and put it all into cash and gold, because of the increasing corporate tax rate, the rising capital gains tax of 44%, and introducing a 25% tax on unrealized gains for wealthy individuals. Most people say, what the hell do I care about a billionaire? Well, you should care a lot, because the billionaires not only are the job producers, job creators, but they're also the ones who have millions and millions and millions and millions of dollars in assets that many of you own in your 401ks and your IRAs, or that the insurance companies own that are insuring you. And if all of a sudden you get the big whales pull out between November, if she wins, and the end of the year, January, before she would enact some of these draconian tax policies, it would collapse and crater the market, and the ramifications would be far, far reaching. And he warned these policies would lead to mass selling and market crashes and a massive, massive quick recession if enacted. That's something to think about. One of the things that came out of the Bureau of Labor Statistics recently is that 1.3 million native-born Americans lost their jobs last year, replaced by 635,000 jobs that were part-time, most of which were from people in this country illegally.
So the solution is to go back to honest banking and get rid of all the laws that give banks special privileges to lie, cheat, and steal.
Yeah, I agree. And, a lot of people, Judy Shelton, if Trump were to be elected, I think has a high probability. There is a high probability of her being the head of the Federal Reserve. And I wonder if someone like Judy Shelton, who is an advocate of the gold standard, would also help inject honesty into a system that is lacking. I mean, despite, contrary to myths, mostly based on ignorance, gold-based system worked for 180 years in this country with the greatest amount of long-term economic growth in human history and no inflation.
The Federal Reserve just cut rates by 50 basis points for the first time in 4 years. Andy, how do you see these rate cuts impacting the markets, and what does this overall mean for the dollar and the U.S. economy?
Yeah, I mean, it's called, well, what you're speaking of first and foremost is called the Cantillon effect. And the Cantillon effect is something that people should understand. When you just simply say it benefits the people at the top, the whole theory of the Cantillon effect is that it benefits the people closest to the money. Having big bank accounts, as I'm sure they do, it's about assets. And the Cantillon effect says those who have the ability to get that money first have a disproportionate benefit to the rest. And that's true. And to your point, by the time the money trickles on down through the system, it works itself out in the form of much higher inflation. And the people who can least afford that inflation are disproportionately affected in the cost of food and energy and housing and all the things that we see inflating as the asset prices have made the wealthy much wealthier. And if you hold your assets in dollars, this is why I say you're destined to go broke, because you can see in a week's period of time, it costs you a barrel of oil, that the value of your dollar, unless you were holding gold, it went up. So the point of it is that this is happening around the world, and it's happening right out from underneath us. And gold has just begun. It's not even close to where it should be, where it will go. And then you throw into it Fed rate cuts, which for the first time in 2 years, we're seeing the ETFs, which have gone down like this, like the Swiss Alps, starting to pick back up and go this way. People in the West are waking up. There's an article I read that Goldman Sachs is their trading desk is being overwhelmed all of a sudden with inquiries for gold. So you put the Western capital back into the gold ETFs as we pivot and lower rates, which has been completely absent over the last 2 years. I don't think that this has even been remotely factored in terms of the upside price yet, the ETF. So because over the past 2 years, we've seen the ETF participation, electronically traded funds like GLD and SLV, fall in the face of a strong dollar and positive real yields. Even though we don't believe the information coming out of the BLS, let's take it at face value. Positive real yields, strong dollar, and negative outflows out of the ETF should be the death knell for gold. Yet it keeps going higher. Now you lower rates and you're seeing ETF participation go the other way. I think we haven't even begun to see where this price ultimately goes to. And then you got Austin Goolsbee, the head of the Chicago Federal Reserve, saying, well, we should see several more rate cuts over the next year, heading down to 3% on the federal funds rate. That would be 4 more cuts of 50 basis points. At that point, I mean, the dollar's toilet paper. It has been eviscerated, at least in terms of its credibility, as far as ever normalizing our balance sheet and doing anything in terms of monetary credibility. I've been doing this since I was 19, man. And if you would have told me in 1989 when I started this company that gold would be at almost 2,700 bucks and you wouldn't hear squat about it on the evening news or anywhere for that matter. And silver right now, again, we're pretty damn close to as high as it's been in the last decade. You don't hear a word about it anywhere.
Right.
From a public
Right.
standpoint, they wouldn't know gold and silver coins if it fell on their collective feet.
Right.
So again, contrarian indicators, bullish indicators everywhere you look, leading into the biggest election of our lifetimes in a BRICS meeting in a very, very unstable time. If you don't get this right now, people, I mean, what you waiting for? I don't know that you ever will. No salesmanship here at all. This is just straight up. I mean, look around you, and if you are comfortable with the status quo, you're a lot braver than I am. You don't need to see it in front of your face at $50 an ounce to wake up. You should just see not only is it continuing to move higher, it's doing so with its arms tied behind its back. One of these days, it's going to be set free. If these commercial banks are indeed covering the way that it appears in the last Commitment of Traders report without enticing the managed money to sell, then it's a whole new game. And you will see silver go bang, just like that. And it seems like we're almost there. So you pull those commercial banks out, realizing that this is a game they can't keep fighting. Yeah, it's going to be a market that I think will be unlike any other that I've ever been part of in almost 40 years of being in finance.
And back to our roots of preparedness, again, for those who haven't been with us very long, our channel, Liberty and Finance, used to be Reluctant Preppers because we talked about having the assets that you need and the relationships that you need and the skills that you need to make it through the times that are coming. And just as most people don't understand that just because every time they walk into the grocery store, they see the shelves stocked full of food, that there's only 3 days supply of food in our food supply chain in most cities. And after that, the shelves are bare. Those who have been through hurricane preparedness, as you and I have, know what that looks like to see the empty shelves in the supermarket. What most people also don't realize is that the retail availability of investable gold and silver to as a safe haven to store their financial future in has a very, very thin. It's like the skin on an apple.
Well, you're right. And that's a point I'm so glad you brought up. The U.S. Mint has already told us they're out of 10th-ounce eagles. My guess is we won't see any new ones until 2025. We've been doing some really big orders lately. Seriously, some very big orders. And people have an affinity for silver eagles. We're already buying, allocations into October. At what point does the U.S. Mint say we're out of silver eagles until the end of the year? It's coming. It's going to be very close. And if I had to guess, and we're beginning to see that already, junk silver is becoming hard to get again. Silver eagles are becoming hard to get again. And so the 10th-ounce eagles are gone. And at what point does it become a realization to the masses that they need gold and silver? By then, my guess, you will see product be very difficult to get. Premiums will pop up in a very material way. And I've been begging people for almost a year. Well, I go back to November 2023 when the premiums started to drop and the availability was great. That coincided really with this AI craze and the massive increase in Nvidia and even in Apple and in Bitcoin and all of this stuff that distracted people away from precious metals and the value that we've seen. But we're beginning to see things start to disappear again. That is the opening salvo, if you will, of all of a sudden premiums going up and product disappearing. I guess we'll see how it all plays out. But if I were to guess again, that by or before Halloween, it will be a vastly different landscape for precious metals, not only in availability, but also in premium. And the way the market looks, also in its price. And when you see these big commercial banks like UBS and Bank of America and all of these other HSBC, they're all making predictions, 2,700, 2,800, 3,000, silver up to 37 to 40. These are things that we normally don't see. And maybe this is the beginning of a change in the way that the metals behave, simply because the commercial banks that have ruled the roost in the West for so long and have had the ability to suppress and move the markets with paper and with volume realize that they're up against countries that don't care about how much they short the price or they don't care about positive real yield or they don't care about a strong dollar. They just want the metal. And that's what we're seeing with a country like India and a country like Saudi Arabia. They don't care. They just want the metal. So that's the way people should look at it. That these people know the playbook. It's not always right there in front of you, but the biggest money in the world, the most sophisticated money in the world, most well-informed money in the world continues to accumulate gold, pushing it higher as the American public, really the Western public, is asleep at the switch. When they finally wake up, the rocket fuel potential is extraordinary. And again, if you would have told me gold would be at $2,600 heading into the biggest election of our lifetimes here in the United States, and it gathers zero attention on any of the mainstream channels, I would say you're crazy. That tells me that there's a long way to go in this gold run, and I'll look forward to riding shotgun with you over the next 8 weeks, Jason, as we got the massive BRICS meeting in October here in about 3.5 weeks, shortly then followed by the election. But with gold at $2,590 an ounce and oil at $70 a barrel, that's 37 barrels of oil for 1 ounce of gold. So you could take $25.90 for those 37 barrels, or you could take 1 ounce of gold. So look at it this way: a woman's purse that could hold 20 pounds, or a backpack that you could run to the car with, that's about 290 ounces. That's worth 10,730 barrels of oil. If you're the Saudis, what do you want? Do you want 290 ounces of gold, which is appreciated by 9.9% per year for 25 years, outpacing every traditional asset, period, that the Bank of International Settlements has reclassified as the world's only other tier 1 asset, that the central banks are buying at a level the world has never seen before and repatriating it, including Saudi, who brought all their gold home from the Bank of England and the New York Fed, the two traditional places of safety that would give access to the hubs of trading, the LBMA and the COMEX? Or do you want gold? And I think that's what these entities are doing. They're saying, I don't want dollars anymore. They can be weaponized. They're being inflated. It's crap. I'd rather have gold, which has a much better track record, which can't be inflated, which can't be weaponized, and has been reclassified the world's only other tier 1 asset by the most powerful bank on the planet. The handwriting is right there, and you can see it. So it all goes back to this bullshit that we see coming out of the BLS, the lying to the world about inflation, about job creation, about all of these things. It's a lie, and I think much of the world understands this. Too bad the people in this country don't. Maybe the people watching you and I do, but yeah, this is something that's only going to get more and more acute, I think, as we see what the Fed will do, as they are trapped like a wild animal, literally between the forces of inflation and austerity. The only problem is austerity in this case means blowing up the whole system, because they allowed it through 20 years of suppressed interest rates to become so leveraged that any chance to go back to any semblance of normal would mean having to blow up the system. You cannot have this system that we have right now without money creation. You cannot have a strong dollar without creating money to service the debt. And I think they understand that. So they're giving in and falling on the sword of inflation. So I guess we'll see what the next several weeks have in store for us. But I think this is just the beginning. I would expect it to get worse in terms not only of inflation, but also in terms of countries moving away from the dollar and choosing alternative assets as we lower interest rates, which is the worst possible thing we could be doing. And when the public is jarred into the realization, maybe through a bank bail-in, which I don't know if your listeners know, but during the Dodd-Frank Act here in 2009, the Congress passed a law saying banks are no longer allowed to be bailed out the way they were during the great financial crisis. They are bailed in, and therefore a depositor is a unsecured general creditor, i.e. last to get paid. And when you look at the massive over leverage and undercapitalization of the banking industry, something like that, a bank fails, is bailed in. People wake up and, my God, they've lost everything. And bang, just like that, the banks start to collapse. There's a run on the banks, and people say, where do I put my money? In an environment like that, in a matter of minutes, you would find all of the available product in the United States gone. And it's a very fragile ecosystem, one that I have seen over and over and over and over again in periods of time where most people in the United States had no idea about gold and silver, and one blip of demand can obliterate the supply. You put it to the level we are right now, yeah, I think we're on the cusp of some very interesting times in this industry, with the big BRICS meeting in just 3-4 weeks and the election a week or two after that. These are anything but dull and complacent times. As the Chinese curse says, may you live in interesting times, brother.